G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. Let's first talk about the ETH ETF, and some interesting news has come in today from James Safard, and he's just explained he's got some alerts on his phone that Grayscale, Ethereum Trust, the S3s, the S1s, Mini Trust, Grayscale, and also you have Fidelity, you have Franklin, you have 21 Shares, and VanEck, and yeah, be multiple more. And you can see that these things are coming in, and we're on the cusp of a ETF launch for Ethereum. And yeah, he's saying it's from Bloomberg, which is quite interesting. So he's up to date there with the latest news with ETH, and it's been pushed back to mid-July or end of the month. So we don't know what's going to happen, but you know it's around the corner. It's just about to launch, and yeah, pretty exciting times. I believe this won't really have an immediate impact on price. We might get I believe, a fake out up, and then a buy rumor, and then sell the news and drop down. So, and then in the long run, going into next year and years beyond, it was really help Ethereum in the long run with its, fundamental structure and how the interest will grow over time. And yeah, we'll see how that goes. So we have Into the Cryptoverse, very, very good channel to follow. And still looking at historical risk levels, and we'll zoom into the chart here. And we can see that this is Bitcoin specifically, and using a linear chart and logarithmic price scale. So the price in blue and the red is the metric scale. And we can see that we are now approaching 0.5 risk. So it's halfway in the, whether Bitcoin's overvalued or undervalued based on all these different indicators. It's a combination of different indicators that makes up this risk metric. It's a very, very clever indicator that I use myself, and I use a little bit different one, but it's quite similar the way it functions. So yeah, very interesting there that we're sort of starting to come down on that risk curve. We also have Mr. Crypto. Do you think Bitcoin can still close green in this bullish month of July? So you can see historically, July from 2013 was bullish, 2014 was bearish, bullish 2015, 2016 was bearish, bullish, bullish, bearish, bullish, 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 and bearish last year and bearish this year, of course. So out of these years, I've had 1, 2, 3, 4, 5, 6, 7 out of 5 were bullish, so it's sort of a mixed period. And then going into August, you can see a lot more red here, except for exceptions of 2017 and 2013, which we got huge increases right there, 30% and 65%. And they were during the bull years, the post-halving years. So if you count them out, and we're in the halving year, you can see 2016 was bearish, 2012 is not on this one, but 2016, and you got 2020, which is another bearish one. So yeah, mostly bearish for August coming up. So, and September is historically, not just the crypto market, but the stock market is pretty bloody. So yeah, the next couple of months could be pretty rough for the markets. See how we go there. Let's talk about the Google Trends for Bitcoin worldwide, past 5 years. And we could see that we are at 20, sort of flattening out, but we're pretty low historically, around these levels of August last year, March of last year, when we had that panic, the banking crisis. So yeah, we're sort of at that level, but there is room to go down even further, like to 13, even to the depths like pre bull. So we had like 9. But you got to understand that we can go to the past 2004 to now. Bitcoin does trend up over time, so you can see the higher lows there over time. It just gets more and more and more, and then you got these peaks which just out of control. 100 there and 70 there, 60, 70 again. So we can come back up again, but these will just continue to trend higher as Bitcoin becomes more established and more people understand it and get to know it. And it can't be ignored. It's been 15 years, and yeah, but we are pretty low there, 23. So I have to monitor that one. All right, that's the Google Trends data, and now we'll go into the charts. So we have Bitcoin here, and on the 3-day, we're looking at my favorite time range to look at. I like this time frame because it's sort of a mixture between the daily and the weekly, and it gives you a good understanding. It's pretty clean. It's very for my strategy, it works really, really well. So I've catered 3-day towards my buying and selling strategy for Bitcoin and the rest of the market. So you can see we have got we broke through this upward sloping trend line that I've drawn from October to January this year, and now coming up sort of July now. So we broke straight through, and we're coming back up again to retest it on the backside. So will this be just another like a retest and basically a rejection back down, and we head ultimately to this awaiting area of 51k, which inevitably I believe it'll get hit, so it'll come back down there, or will it just break up, continue up, and then just break up to here? It's the mid-level of 65k, then come back down, consolidate for a bit, then go and take out the highs, and then go into a left translated cycle and all the way up to the moon. So you got the left translated cycle theory, which will be a top at the end of this year. If it follows the normal periods, which I believe historically that's what it's done. And why would it be any different? We'd have a top at the end of the post-halving year. So you can see that was a post-halving year there. Post-halving year there. Go back to 2017 and have a look. A bit slow today, but please forgive me. So that was it there. And we could see that this is end of the year. And in 2013, you had the same thing. Pretty much end of that year. So I'm just looking back at that data, and you can look at a logarithmic scale to get a better understanding of the cycles. And yeah, I just believe it'll follow these cycles regardless of what really happens. I hope we can get the recession over and done with this year. So going into next year, you can recover from it and then go up to that parabolic phase, which I believe will be right here, and price prediction to 250k. So yeah, we'll see what happens there. It's just based on a logarithmic curve, which I can quickly show you. Before I do that, I'll just get it with Gann swing, and I can show you the logarithmic curve, which is a very, very interesting chart. As we can see, it tracks the price pretty well. Going back to here, which is like, right beginning, it doesn't go back that far. Unfortunately, my chart data, if I had the better plan on TradingView, I'd be able to see that, but not the case in this one. So you can touch the top of that logarithmic trend line, and we did it again here, 2017. We got close to it. We didn't go right at the top band. We went to the lower band, this pink. And yeah, based on this data, look at across to my right, you can see that the price would be approximately at the lower end of this band, 250k, and the top end going at the end of the year go to December, further out, you can see, zoom out, is 400k, which is ridiculous. I don't think we're going to 400k. And that's a long shot. That's a really big increase, especially from here. You're looking at from current levels, absolutely ridiculous. That's a 600% increase, 7x from here, which I don't believe is going to be. I don't know. The asset size of Bitcoin, it's 7x is a huge feat, and I don't think we can get there just due to the sheer fact that we are a lot larger and diminishing returns do kick in, and from cycle to cycle we do get shallower and shallower returns. So, we would have had good returns back here from the bear market to the top. 51,000%, like that's absolutely crazy. And then you had this one here, 2018 low, 2015 to 2017 top, 12,000. So a big drop off, diminishing returns. And then we have the COVID one. We can go there, or you can go right to the bottom here, about there, I think it was, 2018, yep. At the top, which was 2,000%. So a big drop off from there to there. So who knows whether we get, because that was going back right down to the bottom, the blue, which is the optimal buying level, which I can measure from this to the bottom, going into the end of the year. I'll just zoom out a bit so you can see a bit better. And you're looking at, if it goes to 400k, you're outperforming the last cycle, which I don't think that's going to happen. It's not going to deviate from the diminishing returns theory. So I believe, 1,500 max, or we could have a disappointing, not even get there, which is very possible. So we barely reached it, like I mentioned. We barely got, we got to the bottom of it, but we didn't get to the top, like previous cycles, like that 2013 one and the 2017 one. Easily smashed it, but this time around didn't get there. So whether we get to there, we don't know. Like I said, 1,500 max or 1,000, which would take us to 175k. And what to see from there. And it all depends on this bottom indicator here, the risk metric. And I'm looking at that very closely to see if we go to blue, get a recession, and then we come back up, and then we get the top, which will touch somewhere around here roughly. I mean, it's just approximate. We have to get a risk metric reading of above 80 or hitting 90. As you can see, previous times, that one there hit it on the weekly. Let's go to the weekly and have a look. So you can see on the weekly, we did touch it there, okay? Which is close to the first peak. All right, in line with the first peak. The second peak was a lower high, okay? The previous cycle, before that, the 2017 cycle, we touched it, we topped. 2013 one, we touched it, and we topped, okay? So, and there's still first peak here, which is quite interesting as well. It's a lot of faked a lot of people out going into the early year and then coming back down, had a bit of a summer lull, as Benjamin Cohen likes to call it, and then after the summer, it picked back up and topped out. So it's a bit of a prediction what I'm seeing for Bitcoin, approximately where we're heading. God only knows what's going to happen. Then you got Ethereum, which doesn't at all follow this logarithmic trend line. Progression band, I should say. And put back the again swing indicator and just have a look at sort of where we're tracking for ETH, just on a price perspective and levels. But we're holding this level at 28.70, and the ETF is only a matter of time before we see some volatility in ETH. And yeah, want to see what happens there. And you got also the Fed this week testifying in front of Congress, which is like midnight Australia, and also the OPEC stuff, the oil commodities market. Then you got CPI numbers, you got PPI. So commodities are looking interesting, and you can see there's a bit of consolidation there, and whether we break out will be determined. Could happen this week, could happen next week, but we're really calling up here for gold, and silver's quite similar as well, calling up, about to break out. We've had a good breakout here. Look at that. Just had these highs, and we smashed them for silver. So going back, even go back to here if you really wanted to. And that was 2021, around the peak of Bitcoin. And we shot back up. Copper's looking interesting as well. Here there's data, because CPI really, it reflects back on copper and oil, and just looking ahead of these leading indicators. And there's another one called shipping rates, which is quite interesting. I mentioned in a Sunday Walk and Talk video, that's the shipping rates skyrocketing right now, and there's an 8-month lag. So that's very, very interesting there. And I'll just quickly show you the inflation rate, and you can see correlations. And I'll just do some drawings. I'll go back a bit, just gives you an idea. So starting here, 2008, we had the big crash in inflation and copper. So very correlated there. Had a big rise up, pretty correlated there. Had another rise up, and inflation went up as well. Copper started to come down. Inflation stayed flat, and then inflation caught up to that move, and then you had all this move down, which meant that inflation went down, copper went up. Okay, so did inflation. Copper went down, so did inflation. Copper went up, so did inflation, which was end of 2021 and going into 2022. And then mid that year, we peaked, but we peaked because copper was already going down. As you can see right here, this pivotal moment, it broke and went down. And then inflation goes, oh, okay, so the commodities market is signaling inflation. So it dropped, copper rose back up. So there's a bit of divergence there, and then we bottomed out as copper really traded sideways, and then we traded sideways, and then inflation went sideways, and now we're seeing a breakout of copper, and then inflation doesn't care. So will it catch up to copper is the question we're all thinking about. So yeah, CPI numbers be very, very telling for the US, and 3.3%, very sticky, and above a 2% target down here, which is the low inflation back in 2020 May, and we'll see what happens there. So yeah, all right guys, I hope you enjoyed that one. I also hope you enjoy the quality of this video. I hope it's improved from the very previous videos. I've been playing around with the settings of OBS, trying to get the best optimal recording settings, and yeah, it's been a bit of a mission, and also the audio has been a drama, and I've finally fixed that. So we'll see what happens there, and yeah, hopefully just let me know if it's improved. And I just want to get better as my content gets better, and I just improve as a creator, educator, to help you guide through this period in the market. So yeah, all right, with that being said, please smash the like, comment your thoughts below, subscribe, stay updated, and I'll catch you in the next one. Cheers.